Mangalam, this year I was looking at a couple of stocks. Hindustan Unilever, everyone thought it was expensive at around 600, 700, 800 rupees. And that one's gone dancing away. It's up more than 40%, I think, in the last 1 year or so. Tell us what's going on in the FMCG space.
Absolutely, a lot is going on in the FMCG space. Nigel, you spoke about Hindustan Unilever up 45%, but take a look at the other large caps as well. We have Britannia, Pidilite, Asian Paints, all of them giving you more than 30% gains in this year itself. One would say, they are expensive, but expensive has gotten even more expensive because if you take a look at the valuations, FY19 basis, HUL, for instance, trades at close to 40 times. Pidilite, Nestle, both of them trading 45 times FY19 earnings. A lot is in store for FMCG. They have withered the demonetization storm. They have withered the GST storm. Let's see, good monsoons, will they bring cheer in the next half of this year and going forward as well? So to talk more about the FMCG space and the consumption theme, we have a special guest, a special lineup on Chartbusters today ahead of the Motilal Oswal conference next week. We're tracking the consumption theme today with Gautam Duggad, the head of research institutional equities at Motilal Oswal Securities. He's come to our studio. Gautam, thanks a lot. Welcome to the show. 45% gains on HUL, Britannia. We have most of the FMCG companies outperforming in this year itself. Not particularly cheap, but do you think they will continue to remain elevated at these levels?
I think the valuations for FMCG space has to be looked into two ways. One is the lack of earnings growth in other spaces of the market, and therefore the preference of investors to move towards high collar defensives. That is the trade which has gone on for last 4-5 years. That trade had taken a bit of a breather in, I think, 2015 late and 2016, but it has come back again because there is again no visibility of earnings in other sectors. And secondly, from FMCG sector's perspective, you have seen good monsoon, second consecutive year of monsoon. You have seen a semblance of rural recovery. At least there is a narrative about rural recovery today, given that you had two good monsoons and plus the MSP price hikes, which at 5-6%, though not very spectacular, but is the best in the last 4-5 years. So that, coupled with lack of options in other spaces and the fact that the overall market valuation itself has picked up, so that has supported this kind of company. And I think from a near-term perspective, obviously at 43-44 PE, which most of this sector is trading at, even on FY19 basis, and on FY18, if you look, it's scary. I mean, almost 50-55 times most of the stocks are trading at. So nobody can say what will happen from a near-term perspective, but most of these stories are still very strong, given that there is still a penetration-led opportunity, which most of these sectors represent, and quality of management has never been an issue in FMCG sector. So from that point of view, somebody with a longer-term 3-5 year view, I think they can still make money. But from a 1 year perspective, things look very hot right now at those valuations.
All right, Gautam, you're talking about valuations. Looking at the Nifty, you were talking about FMCG stock companies trading at around 40x. The Nifty is trading at around 20x. Y'all, as a house, I think y'all are factoring in a 14% growth on the Nifty EPS after doing nothing in the last few years. 480 rupees, that's what you're factoring in on the Nifty EPS, and from there you're expecting a 20% growth. Is this story likely to get pushed forward? What's the downside risk to that 480 rupees?
So I think last 4 or 5 years you have seen that story getting pushed every subsequent year, and this kind of narrative has been there from FY15 onwards, and even this year for FY18 you started with 17-18% growth. Right. We are at 14 already, and I think the problem is not with the exact number, whether it is 14 or 17. The problem is with the confidence levels on those earnings, because a lot of sectors are still having a lot of operational headwinds. You look at PSU banks, you look at telecom, you look at IT and pharma, two big sectors which are not contributing to the earnings. And at the margin, the disruptions which have happened in the last 18 odd months in the economy, be it GST, RERA or demonetization, that has also put its own sort of headwind for the market earnings growth. So while we have an estimate of 14%, I think the confidence level in those 14% and 20% numbers, given what has happened in the last 3-4 years, has shaken a bit. And at the same time, you still have some bit of optical low base going into the second half of FY18. So you have demon driven base of FY17 second half, which will help the earnings to jump to an extent. So last year you did 7.5% kind of an earnings growth on Nifty. Maybe this year you will end at around 10-11%.
Absolutely.
All right, fair point there. We'll keep an eye out on the earnings on the Nifty as well as the consumption space. With that, we'll step into a short break, come back, and we'll continue with our consumption theme. We'll get chatting with V. Srinivasan, the CFO of Godrej Consumer, on the other side. Stay tuned. Welcome back. You're watching Chartbusters. So let's dip right into the promised conversation with Godrej Consumer. V. Srinivasan, the CFO of the company, now joins us on the show. Thanks a lot, Mr. Srinivasan, for taking time out for this chat. So as far as your first quarter numbers are concerned, they had the GST impact. So the first question that I'd like to ask you from my end is that you said recovery is imminent in the next few months. This is what you had said post the first quarter numbers. Now we're 2 months into this quarter itself. What kind of recovery have you seen post GST? High single digits is what you saw in April and May. Is that something that you saw in June and July as well, post July and August as well, post the GST destocking?
Yeah, so as you rightly said, there was a bit of channel destocking in the month of June because the channel was not sure about the way GST would play out in terms of final end consumer prices, the tax rate, etc. And therefore, as usual, they have been extra cautious in their stocking. But now we didn't see any impact in the consumption as such, and now the pipeline restocking is happening, and we are seeing good traction in terms of sales. What the companies report typically is primary sales, their sales to their channel partners, and therefore that is what got muted in the first quarter. It is not because of consumption, in my view. All right, so we do expect to see decent growth in the coming months.
Could you quantify that decent growth?
And the traction has been good in July and August, as you asked me.
Right, so high single digits, low double digits.
We wouldn't want to do that at this point in time.
For full FY18, if you must?
We can see, I would say that for the year we expect, for the second half we typically would like to see double digit growth.
All right, typically you like to see double digit growth.
Based on current estimates of how the consumption, etc. moves.
Absolutely. You know, Mr. Srinivasan, you've had a good record in the last 7 to around 8 years. So let's hope that continues, at least for the sake of your investors. But I had another question, you know, in terms of international business, let's focus on the Indonesian business. Some time ago, you all were talking about doing 380 to around 400 crores on a quarterly run rate. When is that possible? And also, you know, the last time I checked, in terms of the non-coils business, you'll have a good market share, close to around 50% of the market are there. Why not launch, you know, and make an entry into the coils market in that Indonesian business?
So we are looking at options in the Indonesian market for the segment where we don't play in currently. But right now the focus is on bringing back the growth in that market. What we did see in the past few quarters was a bit of macro issues which in fact impacted the whole of the industry, and we were also impacted by that, and particularly in our HI segment, which, as you rightly said, is a predominant or a dominant part of our revenue. There was impact because of very stiff competition. We expect to launch a couple of innovative products in the coming months, and that should see the conversation getting moved from just price-based or promotion-based sales to sales based on better products and innovative products.
So the last time you said that you were working towards stemming that stiff competitive environment as well. So how has the update been so far? Is it still as competitive, or there has been some bit of a floor put to that?
So basically, it's not peaking any further. Our expectation is that it will moderate over time, because this is not something that will be sustainable over the long run.
So just wanted to slip in one question from my side, more from a broader industry perspective as far as pricing is concerned. We all have seen last 4 or 5 years the inflation was in mid single digits, high single digit to double digit, and that sort of helped the consumption space as a whole, given that the pricing power is always there. Now in the economy in the last 1.5 years, you've seen inflation tapering off 4-5% or 3% odd. How do you see the consumption space getting impacted because of that? Because we've seen that volume growth tends to remain in a bit of a band, and there is so much you can do with pricing. So how does that impact the overall top line for the consumption space, not just from this year but slightly longer term, 2-3 years perspective, given that inflation is not expected to perk up significantly? So
our focus largely is on innovation-led growth. premiumization of our products, etc. We have seen that in the last 2 years, because of the benign commodity cycle, the bulk of the growth for this sector came from volume-led growth. We are focusing on improving our distribution reach, go-to-market strategies, and better execution on the ground to ensure that we continue to grow both volume as well as price-led growth.
Sure. Thanks.
All right, Mr. Srinivasan, thanks a lot for joining in. We'll keep an eye out on the numbers and the recovery in the second half in particular, where you've guided for a double-digit volume growth. With that, we'll slip into a short break. Up next, we will speak to another FMCG company. Mr. Ullas Kamath joins us from Jyoti Laboratories. Stay tuned for that conversation as well.
Well, we still have with us Gautam Duggad of Motilal Oswal Securities, and joining us now is Mr. Kamath, the joint MD and CFO of Jyoti Laboratories. Hi, Mr. Kamath. Thanks so much, sir, for joining in today. FY18, how is it looking? First quarter, we saw a bit of a degrowth. FY17, you did a growth of around 5 to around 6%. The last time you told us 10-12% we're going to do in FY18. Are we moving in that direction? Do you believe there is some downside risk there?
Yeah, I think looking at the way how GST has affected everybody in the first quarter, I think this year if you are able to do 8 to 10% in volume, we should be very happy about it, because we thought that the GST will settle down very quickly, but it is not. Still, wholesale is yet to pick up, and post demonetization, the impact what we had in the wholesale market, especially in the northern and eastern India, it is yet to recover. So in the current year, 8 to 10% is what I think for the whole year, considering the 15% reduction in sales what we saw in the first quarter. Overall 8 to 10% is what I see for the year 17-18, sir.
All right, so that is you've lowered the target from 10 to 12 to 8 to 10.
Yeah.
All right, if you could tell us, what are your segments which would lead to that growth? What kind of growth are you expecting in individual segments, dishwashing, fabric wash, as well as the household insecticides segment? And also, Mr. Kamath, if you could tell us what happens to the margins. The last quarter, of course, was an aberration. 12% is what you did, but we did see an expansion in the gross margin. So can we see 15-16% plus margins for the end of this year, closer to that 18% mark perhaps?
Yeah, for the current year 17-18, gross margin will be around 50%,
right,
which is a couple of percentage point more than the last year, and EBITDA will be between 15 and 16, because we need to spend a lot of money on advertisement. I'm earmarking 13% of the business on advertisement. Keeping that in mind, 15-16% is what I see as EBITDA margin for the full year 17-18, and gross margin at 50%. And as far as the growth drivers will be, it will be the dishwash segment, followed by household insecticides, and then detergents.
Hi sir, just want to get your thoughts on southern geography. You obviously have a higher salience there, and there we have not seen any pickup in monsoon so far, and last year also was very bad there. How do you see that? And secondly, you were referring to GST impact on northern and eastern geographies, and there things have been slightly slower. How does that shape up as we progress more into FY18? Does it also put to risk FY19 numbers also, not just for you, but from a sectoral point of view?
Yes, as far as south is concerned, this time monsoon is a little better than last year, and Kerala, did have a little bit of sales degrowth in the last quarter, mainly because of trade association came very heavily on all the companies, saying that they want additional margin. So we stood by our margin, we did not increase it like any all other companies. So that is the only reason Kerala why it has degrown. But otherwise, south has picked up very quickly when compared to north and the east, mainly because of wholesale here is more organized, and more banking, and post demonetization also we saw within a couple of weeks they were up running the wholesale market. As far as the north and the east is concerned, starting from western UP till North Bengal, banking is an issue still in the wholesale market, and the entire retail segment there, especially the villages less than 10,000 population, will always depend on a wholesale channel, which is completely did not recover at all according to me. And we are trying our best to go to the retail market directly through the distributor. We have put more than 500 vehicles in the marketplace. So all these things are there, but 17-18 will be difficult for everybody in the north and the east as far as wholesale is concerned.
Okay, Mr. Kamath, now before we let you go quickly, this is a question that we cannot avoid every time we meet you. When the Henkel deal happens in October, what are the key management changes likely? You know, what exactly can happen as far as the integration of both the companies is concerned?
Talks are still on. I've been telling that for the last one quarter, but this quarter we're completely tied up with GST matters, getting our business, back to the normalcy. And talks are on. It's a cultural issue, and also it is definitely it's a long-term thinking. Both of the companies we are holding on, and with that,
is there a possibility of it getting postponed?
Everybody will know. I didn't get you, sir.
Is there a possibility of this getting postponed? It got pushed, to October 2017. Can it get pushed even further? Will we hear something? You're promising us we're going to be hearing something?
Yeah, you will definitely will hear before October 31st something, but definitely there won't be any postponement because we have dealt with this for many quarters now.
Okay.
All right, Mr. Kamath, thanks a lot for joining in and giving us all those details. So this time he is rather confident that something will come, irrespective of what it is, something will come before October 31st. With that, we've completely run out of time on Chartbusters. Thanks a lot, both the managements of Godrej Consumer as well as Jyoti Laboratories and Gautam for coming by and giving your interesting perspective on the consumer sector. With that, we wrap up on Chartbusters, but stay tuned to CNBC TV 18. Trading Hour comes up next.